Ever watch the global money markets and just wonder what's really going on behind the numbers?
It can definitely feel like a black box sometimes.
Yeah, exactly. So today we're going to unpack something kind of specific, but potentially quite significant. The South Korean won and the Taiwan dollar. They've been getting stronger, like unusually strong, fast.
Mm-hmm.
Now, on a surface, you might think, hey, strong currency, that's good. But there's this undercurrent of unease. So our mission today is to figure out why this boom might actually be a bit uncomfortable.
Right. We've been looking at some recent analyses, trying to piece together the story behind these movements.
Okay, so just how strong are we talking? Give us the scale.
It's pretty dramatic. The Taiwan dollar, for instance, jumped something like 10% in just a few days.
Wow, 10%.
Yeah, it's apparently its biggest move in, well, decades. And the Korean won, it also saw a really significant rise, dipping below that 3,370 mark against the dollar.
Okay, so your first instinct might be maybe better vibes between the U.S. and China on trade. That usually helps Asian currencies, doesn't it?
That was the initial thought, the easy explanation. Better trade equals stronger economies equals attractive currencies. Simple.
But there's always a but.
But here's the twist. While the currencies were surging, the stock markets in both Taiwan and Korea, they were actually falling.
Huh. Okay, that doesn't fit the simple trade story.
Not at all. That disconnect points towards something else, something deeper driving these currency moves.
And the analysis seems to zero in on Taiwan's situation first, right?
Yeah.
Something about massive overseas holdings.
Exactly. This is crucial. Taiwan holds an enormous amount of assets overseas. Think about 3 times the size of its entire economy.
3 times? Wow.
Yeah, and a huge chunk of that is parked in U.S. stocks and bonds.
So what changed? Why move that money now?
Well, a couple of things seem to be converging. The U.S. dollar has been weakening a bit, making those dollar assets maybe less attractive. And then there's political uncertainty. Some analyses mention concerns about U.S. political shifts. Investors might be getting cautious.
So Taiwanese investors are thinking, maybe time to bring some cash home, sell the U.S. stuff, convert dollars back to Taiwan dollars.
Precisely. They sell the dollars, buy Taiwan dollars. Basic supply and demand kicks in. More demand for Taiwan dollars makes its value shoot up.
And given the sheer scale of their holdings you mentioned?
Exactly. Even a small shift in strategy can have a huge impact on the currency because the sums involved are just so vast.
Okay, so that explains Taiwan. What about South Korea? How does it get pulled into this?
Korea's situation isn't identical, but there are parallels. It's also a major export-driven economy, and it holds significant foreign investments. So it often moves sort of in sympathy with regional trends.
Like a proxy.
Yeah, you could say that. The Korean won is often used by international investors as kind of stand-in, a way to adjust their overall bets on Asia. So when big moves happen, like with Taiwan pulling money back, the Korean won often gets dragged along.
But isn't a strong one potentially problematic for Korea? I mean, they export a lot of cars, electronics.
That's the potential downside, absolutely. A stronger one makes Korean goods more expensive for people buying them overseas.
Right.
So what looks like a win on the currency front could actually hurt their export competitiveness, which is, a huge engine for their economy. It could create real headwinds down the road.
So this isn't just about two currencies. Some experts are worried this signals something bigger.
There's definitely some concern, yeah. Could this be the start of a reversal? For decades, Asian countries, particularly those with big trade surpluses like Taiwan and Korea, have basically recycled their earnings by investing heavily in the U.S., especially in U.S. government debt.
Funding the U.S. deficit, essentially.
In a way, yes.
Yeah.
If they start pulling that money out, selling U.S. assets.
What happens then? What are the ripple effects?
Well, it could have pretty significant consequences. Think about pressure on U.S. interest rates, impacts on global capital flows, asset prices. It really underlines how interconnected everything is. Decisions made by investors in Taipei can ripple through markets in New York and London.
So summing this up then, the strong won and Taiwan dollar, while looking good at first glance, might actually be masking some economic pain for these countries because of exports.
That's a key tension.
And maybe, just maybe, it's an early warning sign of a bigger shift in how global money moves around, less flowing to the U.S. from Asia.
That's the underlying question, definitely. It's crucial to look beyond the headline currency number and understand the why and the potential consequences. A strong currency isn't always a simple victory.
Which leaves you with a final thought to chew on. Could we be seeing the first tremors of a major rebalancing? A shift in where global savings are parked, and maybe, just maybe, a subtle shift in global economic power itself. Something to keep an eye on.